Ever wonder what separates the top 1% of traders from everyone else? Well, I recently watched a very interesting interview with a top prop firm CEO, and in this video, he breaks down the stats from over 50,000 traders, and some of the results he talks about might actually shock you. So what I'm going to be doing is I'm going to be reacting to his breakdowns, and I'll be pulling out the most valuable insights that he's talking about in this very long interview. And stick around because I might not agree with everything he says. So with that being said, let's dive into the interview.
How do you view the social media elements and just the ability to learn and find correct guidance compared to your era where it wasn't the same?
Yeah, so I think the same problems we have with social media today are the same we had back in the day, which is creating unrealistic expectations on traders to what's achievable consistently. You see the flashy, you see the cars, you see the Lambos, you see all of that, and it always looks like it's easily achievable, and it's not reality.
The social media aspect of trading in this day and age can very much affect traders, right? Because a lot of the times it's very fake, right? These guys are showing off a lifestyle that they say they are getting from trading, when in actual fact, it's the lifestyle that they are portraying so that you will buy the course that they are selling, right? And we talk about this all the time. So it's just something he's talking about that's saying that hasn't changed. That's been around back in the day and it's still there now. And it is a problem because, a lot of people come into social media, YouTube, they come looking for, ways to make money, and they are drawn in because they are already in that mindset of, I want to make money as fast as I can. Oh, wow, look at this guy. He's, bought the cars, bought the mansions, and he's living the life. I want that, right? So just be very careful when you are looking for strategies or looking for advice, just be very careful who you follow, right? If often it looks too good to be true, or they are showing off, that lifestyle, just be very careful. I'm not saying all of them are like that, but it is just worth noting that there are a lot of influencers out there that are not necessarily telling all the truth. Right, let's get back into it.
If you're going to be scalping, you better have more time to trade, right? If you're going to be just doing position trading, you might not be doing Forex. You should be maybe trading stocks. The Forex market is very rangy. So understanding which market, what time frame, if you're going to be position trading or scalping, that takes a lot of time. And if there's no one there to guide you on what's your individual situation, what's your individual reality challenges, blind spots, and help you overcome those, it takes a lot of time to figure that out by yourself, right?
Okay, so what he's talking about now, guys, is, just understanding what type of trader you are, right? You obviously have your very short-term type traders, day trading, scalping, in and out of the market a lot, can be in and out of the market many times in one day. It can take up to 20, 30, 40, 50 trades in a day. And then you've got the kind of longer-term swing traders, position traders that are holding positions for much longer. And generally, this can go anywhere from, having one position in a day over 24 hours, maybe slightly shorter term, but still it's longer in comparison to your scalpers, right? And then you have your much longer term, right? People that are holding on positions for, in some cases, 3-4 days, even weeks or months, right? So he's talking about you having to understand what kind of trader you are, because it comes down to the personality, right? Some people can swing trade. They have the patience to swing trade. Others can't. Other people, don't have the discipline to scalp, because when it comes to scalping, you've got to understand that generally you're going to be in and out of the market a lot faster. The market moves quicker. You've got to be able to withstand more losses. If you're a scalper, generally you're going to be taking a lot more losses because you're just putting in so many more trades, right? So understand what kind of trader you are. And this sometimes just takes time. And he says that, right? So trade a demo, try do both types of trading, try get into more long-term trades, try get into, quicker trades, and see what type of trader you are. And don't necessarily think about the money alone, right? Because if everyone is thinking about the money, then everyone's going to want to be a scalper, right? They want to get in and out the market quick because they want the money fast, but that also can mean you can lose your money fast, right? So just an interesting fact that he talks about there.
When you just open YouTube and you listen to someone, you will always hear try to keep both high, right? A high win rate, a high risk reward ratio. I've seen very few traders, and from my position today, I scan thousands of traders. Very few traders that can keep both ratios high consistently and long term. So there's always a trade-off on the trading style you're using, and as long as you understand the reality and the real long-term stats of both, and you can keep to them, and filtering out the bad setups and just sticking to the A+ setups, and performing well.
Okay, so very interesting what he's talking about here, which is win rate versus risk reward ratio, right? And what he's saying that is his style of trading is a much higher win rate, but he has a very low risk reward ratio. And also from the stats that he has seen, it's very, very rare to see someone that has a high win rate also have a high risk reward ratio, right? So it's very difficult to have both, and you shouldn't really be hunting for both. You've got to figure out where your sweet spot is. Are you someone that's going to be a 1-to-1 and maybe, you know, be happy with a 60%, or are you going to be someone that can take the losses but is getting a much higher risk reward ratio? Maybe you are getting a 1-to-3 on every trade. For every one you risk, you'll bet, you know, getting 3 back, but this might mean that your win rate drops down to like a 30%, but you'll still be profitable, right? But then it comes down to, again, can you withstand those losses? And again, comes down to like what kind of trader you are, and also understanding your system and understanding how it works and understanding what that win rate and risk reward ratio is. So it's a very important stat that you need when you are coming to the market.
I think in prop firm eras, the profile of traders and the behavior of traders have changed from back in the day when we used to trade only brokerage accounts. You know, the fact that traders are developing the skill of getting paid and not necessarily the skill of trading. Okay.
Gamifying the prop firm industry.
Okay. And they counting if they're profitable or not profitable depending on how much they're investing on challenges against how much they're getting paid of trading companies, and not necessarily on their P&L.
So this is really interesting. I don't really agree with what the host said, where he said you're gamifying it. I don't agree with that, because I don't think that's necessarily what the CEO here is saying. What he is saying is that the traders have changed how they trade when it comes to prop firms, right? And the reason being is when you're trading on your own account with your own money, the whole point is to minimize your risk, right? Minimize the amount you're losing and making sure that your account keeps growing, right? So you will trade very carefully. You'll make sure that, you know, your risk is always on point, and your whole kind of objective is to keep growing that account as much as you can. And the longer you grow that account, obviously the bigger your balance gets, which means the more you can make from that, right? But when it comes to prop firms, it's completely kind of changed how people are trading, because your initial risk is what you spend on the challenge, right? And if you get to a funded account, then what you make back is your reward from what you risked, right? So talking about away from the charts in doing the challenge, you already have a risk reward ratio going on the outside, right? You have your $400 to $500 that you've spent to take a $100,000 account, and then you get to that funded account, and then when you make back your $2,000, let's say, you've now got a 1 to 1.5 or a 1 to 2. If you end up making more from that, then that becomes your risk reward ratio away from the charts. This is how people are trading. They are trading for that kind of what can they get back from that initial input, right? And this is very interesting, because this is actually how we look at trading prop firms at Blue Edge Financial as well. After all of the data and many years trading prop firms, we also realized that it makes more sense to trade this way. And if you've not seen my video where I'm talking about how to trade, actually the last video I did was going into detail about our system, so make sure you check that out. But basically we talk about taking as many challenges as you can afford, as long as you have a, you know, system that works, because basically you're looking at how much you're spending on each challenge, right? And in our case, we have a 30% pass rate. 30% of the challenges we're taking, we're going to pass, right? And then you got to look at what are you getting back from that challenge. And we don't care if we lose that challenge quickly or not, right? Because we're kind of taking as many as we can. We're running the system for that risk reward ratio. We have an EV calculator that we actually give to our customers, and that basically says every challenge you take, what is your value? What are you getting back on that, right? So it's kind of like a risk reward. And we've calculated this over a huge amount of data from all of the people that are trading our system in our community. And we have somewhere along the lines of a 1 to 2 risk reward ratio, right? Now, this doesn't mean that every single account you're going to be passing. It means over the long period, over the long term, you know, if you're taking 3 challenges, you fail those, but then the 4th one you pass and you make $3,000 or $4,000 on that one, you know, that's how it's evening out this EV rate. So if you run the system for long enough, you end up seeing a 1 to 2 from that, which is not bad, meaning that you can take out, you know, double the amount for every challenge you take. Now, bearing in mind, and I'm not talking about every single challenge you take, you know, you've got to be running them to get these numbers numbers out. And we're seeing a huge amount of success because some of our, people in our community are taking 20 challenges at a time. Now, with 20 challenges running and you have that kind of EV, you're going to have months where you are getting, a serious amount of kickback from that. So it's very interesting that he's talking about this. And it's also interesting that it's the same thing that we've seen, right? Everything he's saying is based on data, and everything we do is based on data, and data does not lie. With that being said, let's get back into it.
Institutional manipulation and all of that, I don't think, I've spoke to institutional traders, I don't think they're hunting our retail stops.
It's an interesting topic which I wanted to bring onto later, but it's the idea of there might be certain price action signatures, and if we see it and use it, okay. But then when we try and explain it, that's where it can get a little bit tricky.
Correct.
Because I've had people on the show that says, yeah, the market is heavily manipulated. Others that say, no, that doesn't make any sense. I don't even know where I specifically lie on the explanation. But one thing that I find curious is the retail industry right now, the millions of traders that exist, majority of them in the last few years have moved towards prop firms.
Yep.
And therefore a lot of the activity in the market from retail traders is on prop firms now. And pretty much all or most prop firms are a B-book environment. It's a demo simulated environment. So then all of these orders that are getting manipulated, they're not in the real market. They're in a B-book demo environment on the broker or prop firm's back end.
Correct. So
then if these orders don't exist, then they're not going to be hunted, therefore. So it does get interesting there.
But even before props, the default strategy of CFD brokers is also B-booking, not only prop firms. So, and let's not forget that it's the CFD environment, so it's just a copy of the real movements.
Okay, so what they're talking about now is the large majority of people that are trading very similar areas, because no matter what system you're trading, generally you're going to be looking at certain levels that are higher areas for trades to be happening. And they're talking about manipulation, the big players in the market manipulating. And then the host is saying it doesn't make sense because most of the people are trading in B-book, which means their trades are not actually live. So how can this be changing the market or manipulating the market? The way I see it, it doesn't matter, because exactly what he's talking about, everyone trades, different systems, but each system kind of dictates a very similar area for entry and a very similar area for your stop losses. And the big players know that, right? And they definitely are hunting stops. There's definitely manipulation in the market. So I think whether you're trading B-book or not, it doesn't matter. The fact remains is that over 90% of traders are all taught to trade the same. Whatever type of trading you're doing, your orders and your placements are always going to be very similar places, right? So I definitely believe there is manipulation in the market, and I think that's something that you can look at. Always whatever's happening with your strategy, and if you're losing more than you think you should, have a look at that. Is there a way that you can try and figure out where the stops are going to be hunted? Where's your stop? And do you think your stop is going to be the same place as millions of others of traders? One of the great traders, I can't remember his name, I saw a short on it recently where he basically says to do this experiment, run every trade you would normally trade, but instead of putting your position where you would normally put it, put your position with the same size stop, but where your stop would have been. So your entry is where your stop is. Give that a go. Yes, you might miss some trades, but guaranteed you're going to lose less, right? Because if it still stops you out, then that just means you've got the direction wrong. But there's less chance if you've got the direction right that you're still going to be stopped out, because you should be, be able to miss that manipulation. So worth giving that a try. Let me know if you do try that, how does it go?
Both stop losses and take profits tend to be the same for all the trades.
Okay.
And that's why my risk reward ratio is break even or even negative. Mm-hmm. But the fact that I don't scale out on my wins is just because that I'm sure you've been there, Walker. You want to ride a trade, you bring your stop losses to break even, and then it reverses and takes you out for break even trades. Mm-hmm. And I think that's what most traders are doing, and most traders are break even or losing money.
Okay, so they're talking about, do you take partials? Is it worthwhile taking partials? And I think this is a discussion that, so many people have their own point of view on. I think there's a lot of traders out there that don't ever take partials, that are happy, profitable. I think this comes down again to the type of trader you are. Whatever your system is and how you've tested it, that's how you should trade. I don't think you should ever switch up, while you're busy trading in a challenge. If you have tested to take partials and that works, then keep doing that. I think it comes down to, your system being back tested, no matter how you do it, if it's partials or not, or you just allow the full stop or the full take profit, if that's how you trade, stick to it. But I think, at the end of the day, it just comes down to what works for you. What have you tested? What strategy have you tested that has given you the best edge? And that's what you trade with, I think, so I think this is a discussion that will go on for years and years and years. traders will never ever end. What is better? And I think it's better for some, not for others. I think it'll always be that way. So I think, don't put too much thought into this.
Now, the next thing I want to transition towards is the traders you mentioned on the back end that you see. You have data of probably hundreds of thousands of traders, and you're mentioning that the most success is found with people holding trades for a little bit longer.
Correct.
And going for a positive risk reward.
Correct.
Now, this is opposite to your own beliefs and what you are doing in reality. Why do you think this difference lies between your own approach that is working for you and many traders that are profitable on your platform? What is the difference here?
I think taking trading skill to the level that you need to be a profitable long-term scalper, for the long run, it takes a lot of time, takes a lot of skill, and a lot of work. And most of the traders that are coming to the prop industry, they're not yet in that stage. And as I mentioned, it requires more management and more patience and more discipline and more screen time. So I think holding that for months in order to scale your accounts and to get into the bigger payouts and all of that, most of the traders are not there yet. So most of the traders I see successfully making payouts and getting to the larger accounts are swing traders, which just requires a good signal, a good entry, and then letting the trade go in your face.
So basically what this section is talking about, he's saying that generally he sees that traders that are better off are the ones that are holding trades slightly longer. So the traders that are the least successful are the traders that are scalping, or the traders that are, taking too many trades per day maybe. And I think this goes hand in hand with the traders not having experience coming into prop firms because they just want to make money. All they're thinking about is the money, right? They are not thinking too much about the position. They are maybe jumping in sooner than they should. They just want too much too fast. And I think if you are patient as a trader, you will always probably see better results. So I think patience is very important. And you could have patience as a scalper as well, right? Just making sure that your setup is a good one. You're following your rules, try and practice as much patience. So, I think the swing traders, it makes sense, but I think it's just because the swing traders generally have more patience. So I think if you can bring patience into your trading, I think you'll see a big change, right? So just give it a go. Try be more patient as a trader.
So in pursuit of sustainability, longevity, to be able to afford with ease the payouts, what did you have to do to adapt?
Without going into too much detail, but you need to profile and you need to understand, today it is becoming a bit easier with AI and machine learning, but to as quick as possible to understand if a trader is going to make for a payout or not, just based on stats. And based on that, you decide if you A book, B book, C book, go against.
And this is on what criteria? Just their behavior in the evaluations.
Yeah.
It's really interesting. He's talking about the whole A book, B book, and how the prop firm industry has changed so much that, according to him, it's very difficult for prop firms to, be successful if they are just doing one. He's saying there needs to be sort of a combination of A and B. He needs to understand which are the traders that are going to be the ones that will cost him more because they are very good traders and they generally are taking more out than they are ever putting in terms of buying challenges, right? He will then say, okay, these are the guys we're going to start A booking, and if they're making money, we're making money as well. So it's about finding that balance, with the traders that are taking more money, then put them on A book, right? Because then you can actually start making money from the good traders, and then keep the traders that are not really finding that much success, keep them B booking, because they'll keep losing accounts and they'll keep buying back into the challenges, and that way they will still sustain, income from those traders as well. So it's kind of trying to get an understanding of which are, the traders and how to actually put these traders in each basket. When he says AI has become a big game changer for them, using AI to give them an idea of which are the traders that are more likely for them to benefit with A booking versus the traders that would be better off B booking. So it's very interesting to see how AI is coming into the back end and the actual prop firms to, come up with that. But it's very interesting to hear, a CEO of a company, and 5%ers have done very well, and they've been kind of in the forefront of the industry for a long time. So, I think what they say is probably holds a lot of weight.
When we are to compare just overall infrastructure, I can see that most people, I want to say, come in with good intentions. Yep. There are the bad actors like anywhere, but majority, even the ones that failed their prop firm, they came in with good intentions, but it's just a hard business model, or it's harder than they thought before they started, which is a reality I'm sure you're aware of, because you've had every high and low in the industry, because you've been navigating for many years, almost a decade now actually. Next year will be 10 years.
10 years.
So with that much time in the game, what have you seen as certain things that you had to do to see how others are, it's a price war to the bottom. It's a gamey, the better the conditions of the trader. But in the end, it's harder to be a sustainable business model.
The difference between like influencer-backed prop firms versus the established prop firms, in my mind, it kind of makes sense. If you can go with the more established prop firms, obviously that's what you want to do. In general, the prop firms that pop up, with massive backing from influencers, you've got to be very careful because these guys, at the end of the day, are in it just to make money. Now, obviously, the 5%ers and the other big guys are there to make money, but they're way more business than that. It's not just about making as much money as we possibly can. It's about running a company that is sustainable, that will be there long term, will be good to their customers, will be good to them, and generally just a good environment where, both the prop firm is making money and the good traders are making money, and there's that good kind of backwards and forwards between the two. Whereas I think you generally don't see that with the big influencer-backed prop firms, and generally you see they will kind of start big, they'll market the heck out of it, make a lot of money, and then all of a sudden stop paying their traders. That's kind of what this section is about. In my mind, I think it goes without saying, trust the bigger, more established prop firms.
When we asked them before that, when we requested from them regulation, they were not willing to regulate us just because there's no retail capital in the game. So what SciSec does and the regulators, the forex regulators do is to protect the traders, the retail traders.
So they don't see this as trading activity because there's no deposit into an account. And how do they view therefore the evaluation fee, which could be seen as a deposit if there is instant funding? Maybe, I don't know.
They're not seeing it. They don't see it that way. So when you see SciSec, they're fine with brokers doing a B-book, for example, as long as they pay. So what they request from brokers is not bad practices, no slippage, no all of that, and to have a certain amount of money, in their accounts in place all the time to be liquid and all of that. And I think for the prop firms, once they decide to regulate, they'll request something similar.
Okay, so this section, they're just basically talking about, the regulations in prop firms and how, even to this day, yes, regulations have come in a lot more since the My Forex Funds thing. And the CEO himself was saying that they are asking for more regulations because then it will be, better for them to kind of run under regulations. They know where they stand, but they generally do run things very well. And I think what he's saying is, they don't really care. The regulators don't really care. They know they're running B books, right? They are making it very clear to the traders that this is B book. It is simulated accounts. And I think this is where the issue was initially with My Forex Funds as well. There was a lot of smoke. A lot of people didn't even realize that they were trading on a simulated account. They actually thought it was a real account. So, but then there was a lot of, some dodgy things happening in the background where these brokers start to do shady things because they are trying to tip everything into their favor because they understand that the business model means that, the more people that are failing, the better they do. The more people they're paying out, the worse they do. So they kind of start to do shady things to make it so that they are still making more money, right? And that's where the regulators are, kind of going to come in and say, we don't care that you are B-book or you are simulated as long as you are paying the traders what they are owed, right? So even now we're seeing a lot of, denials on payouts for some really obscure rules. They come up with some really obscure rules that make it so that they can just decide to not to pay you. And it's these kind of things that, that I do hope more regulation comes in so that everyone knows where they stand, right? And we can trade a prop firm where the prop firm is like, they know these are their boundaries. Don't go out of that. Otherwise they're gonna, face the penalties. And us as traders know that as long as we stick to these clear rules, then we'll make money, right? So I do hope and I do think that the future, we will see more of that regulations and a much clearer kind of, road ahead in terms of prop firm trading. This is what you do. This is how you make money. And for the prop firms themselves, they'll also understand, how to make money. But one of the ways is what we talked about as well is A booking and B booking. And I think that's something that more prop firms need to start looking into.
That doesn't work that way, at least not in the fibers. Because if I have traders with 100K account, it doesn't mean I need in my pool account to have 100,000 time each one of the traders train that. I only need to have enough capital there with the leverage to allow them to trade whatever they need to be able to trade.
Margin, yes.
Okay.
Okay. So yeah, basically what they're talking about again is going into the A booking, and the people that do the A booking is, sometimes people think that how is this possible because every single trader needs to have $100,000, and that's not the case, right? A booking doesn't mean that they are trading on a live account. It means that they are still trading on a simulated account, but their trades are being copied over to, let's say 5%ers has a few main accounts, so they will be traded over on their main accounts. The traders will still be trading on a simulated account, but everything is copied over to their accounts, right? So they will be making money. And this is how they are generating capital so that they can keep paying out all the traders that are profitable without getting into that situation where they start paying more to the traders than they're actually getting in from people taking the challenges, right? And that's always been the biggest issue with these prop firms. So very interesting topic, and very interesting to see that these guys are constantly thinking about, how they can always better the environment for everyone.
Would this cause any regulatory issues? Because a few prop firms I spoke to, they said, we would want to get into the instant funding space because it's an attractive offer, but it looks too close to a deposit in a broker to have access to larger leverage. And you just worded a difference, and that triggers into a broker space.
Correct. So that's the key. If you want to offer instant funding, you need to make sure that the cost of the account covers most of the drawdown you're willing to offer. And then it's similar to our very first model, which we used to do 50% split with the traders, the one-step program. But that, on regulators' perspective, would be considered a deposit. And just to avoid going that direction, we haven't implemented that model. But I think our main concern would be that.
Okay, that's interesting. What he's talking about is instant funding, and they don't really have an instant funding per se, because I think what he's saying is, from the regulator's point of view, an instant funding still as a deposit into an account, right? Because you're depositing money and straight away you're getting to trade, right? That's why the 5%ers don't really want to do it. That's from how I understand this, is that, they worry that it'll be seen as they are pretending to be a broker, which they're not. They are, still simulated funds. So it's interesting to see, that point of view when it comes to instant funding from the prop firm's side.
So I think that balance within, traders' understanding of the industry and companies' understanding of the industry and the risk management behind, is kind of setting the levels of what's sustainable. I don't know how many more companies can come and make it and stay sustainable, but I think in a couple of years we're gonna see these 50 companies or 20 companies that make it and that lead the industry.
Okay, so it's interesting talking about like the future of prop firms, and he's saying that the prop firms that are running it properly, doing the things that you should be doing, taking all the business side like they do, and really thinking about the long term, the sustainability, and not just going in too quickly. He says that he reckons in like 10 years time there's going to still be a big number of prop firms that are around that are sustainable, which will be great to see. The problem is with the prop firms now, there's always new prop firms coming in, going out, but it's just how and which ones are we trusting, right? Obviously, the main ones we trust are the ones that have been around the longest, right? So, if we can start to see prop firms stick around for long enough, get through that initial phase of, understanding the business world, understanding the prop firm world, and, understanding that the traders should come first. Obviously, their business is important, and it is important to, business comes first as well. But having that balance between the traders and the prop firms and making sure that they run in unison. And I think it's good to know that he thinks in 5-10 years there's going to still be a lot of prop firms around that stand the test and are going to be trustworthy. So that's not to say there's not going to be some dodgy ones coming in and out. I think there still will be, but I think in general the number of prop firms that are sustainable is slowly going to grow. So I think that's a good thing.
What about general behavior? So you mentioned trade duration is more favorable for the profitable traders, is a longer hold time. What are the patterns would you say in terms of trade frequency, risk strategies, high risk, low risk? You could also have stop loss size in average, asset classes chosen, trade many things, just trade two things. What are the behaviors have you seen in the profitable?
That's a great question, and it's that's very clear to spot and to see and to explain, because we have a very powerful program in the Fibers, a scaling plan. Okay, every time you hit a milestone, we scale up your account, and we have one of those scaling programs which we double your account each time. So, which is very powerful. Traders who commit to long term and hit 10% a couple of times, they're very quickly managing 300K, 500K, 800K, $1 million. And there's only a few. It's like a pyramid, right? A lot of traders on the base of that, and a very few and fewer advance to those higher levels of funding.
Okay, so basically what he's talking about here is what are the kind of traders that find the most success. And I think it's a difficult question to answer because there's so many different types of traders. Like we've talked about, traders trading the prop firm totally different, taking the risk as what you're spending on the challenge versus what you get out from it, right? So I think there's those traders, and then I think there's more the traders he's talking about now, the traders that are looking for long longevity and looking for that scalability, because a lot of these prop firms offer really good scaling plans. But like you said, there's that pyramid. And as you go higher into that scaling, you just see less and less traders, right? So what does that tell you? It is very difficult to hold accounts long term. It is very difficult to keep scaling. You know, it tends to be the top 1% of the traders that are going up to the kind of higher levels of the scaled accounts. What is he saying about those traders? Those are the traders that seem to be not scalping or not going in and out of the market many times a day. They'll be holding positions, they'll be hitting their stop loss, they're sticking to a very set plan, right? And I think that ultimately just tells you, you know, everything you need to know. If you want to be profitable long term in this game, you've got to find your strategy, you've got to find your system, and you have to stick to it. If you keep jumping from one to the other, you're going to find it very difficult in this game. It's very interesting to get the insight of the CEO of one of the top prop firms in the industry, the Fivers, you know, from his point of view, because it's sometimes really nice to see from the other side, right? Because yes, we're trading these prop firms, but if we get a deeper understanding of their side, I think it's a good thing. I think, you know, that's one of the things he was talking about, is that understanding between the two. You know, we both need to understand how the industry works. And I think nowadays more and more people are understanding how the prop firm industry works. I think if you still have people coming into the prop firm industry now thinking that you're trading on a live account, then you should not be trading prop firms. I think at this point in time, we all know that it's simulated accounts. And even people that, you know, argue, yeah, but there's a lot of prop firms that are A-booking and you trade on a live account. Like I said, you're not trading on a live account. There's no prop firm in the world that is going to have enough capital to give, you know, 100, even if the top 100 traders are all trading on a 100K account, they're not going to have that kind of capital, you know, to throw forward and give access to their traders. So it's all very interesting. It's great to see him sitting forward and talking about this. And I think it's a testament to the 5%ers, right? He has a guy that's kind of willing to like talk about all this stuff, talk about it from his point of view, from the statistics he's seen, give all the information. And the 5%ers is one of the prop firms that have been around for the longest and probably one of the most trustworthy. You look at them on Trustpilot, I think they are currently potentially the top rated prop firm, or one of the top rated. So really interesting, guys. Yes, this video is a little bit longer, but it wasn't as long as this video itself. I hope you enjoyed it. If you did enjoy it, you know, please hit that thumbs up. Put down in the comment you'd like to see more reaction videos, because it's a great way to spark discussions based on different things that people are talking about, right? I really enjoy doing these. You know, I did speed it up because I didn't want it to be too long. I'm just taking the bits. I'm getting what I can from the video, and then I'm giving it back to you guys, feeding it to you guys. If you guys do want to watch this whole interview, I'll leave the link down in the description so you can go look. With that being said, guys, I did talk a little bit about our system and how our system is doing exactly what he talked about, you know, the risk reward based on the challenge itself, taking more challenges and running it like a business. And we are doing that, I think, better than any other company on this planet. So with that being said, if this is something that interests you, you are interested in, you know, making that 2-to-1 on every challenge you take, then make sure you go to www.propfarming.com. There's a fantastic demo video there, gives you all the information. And then if you're interested, you just go through to the application, fill in the application, and then we'll get back to you. With that being said, guys, thank you very much for joining, and I'll see you in the next video. Bye for now.